Now our next question comes from Mia T. Volta or ChargePoint? Which one has the best growth potential and business plan?
Great question. So, I think both are compelling long-term investments. ChargePoint is the lower risk, lower upside play. It is the leader in L2 charging. They have the widest network. They have the best app. Their mobile app is fantastic. They have a great team. They have all the partnerships. They have a lot of enterprise partnerships, which are big in this industry, right? Because if you win over Facebook, then you win over all of Facebook's offices. Facebook's not going to have ChargePoint chargers at one place and EVgo chargers at another place and Blink chargers at another place. No. If Facebook has ChargePoint chargers at one office, they're going to have ChargePoint chargers at every office. That's just how enterprise contracts work. ChargePoint has a lot of really promising enterprise contracts with a lot of big companies that have multiple office locations. A lot of those companies are very what you would consider eco-friendly companies. I would assume a lot of their employees drive electric cars. So huge demand there on the ChargePoint ecosystem side of things. Love that stock. It's been beaten down. That company is hiking guidance. Their revenues are surging. This is a place where the divergence is pretty big. That company honestly could not be growing more quickly. Yet the stock's been hammered. I think buying here with a long-term mindset and holding for the long haul is a really, really, really good decision. I think that stock can make folks a lot of money in the long run. Moving on to Volta, higher risk, higher reward play. I love the Volta business model. I think it is genius. I think it is nothing short of genius. So for those who are familiar with the name, Volta is an EV charging company, but they're basically a real estate company and a digital advertising company. So as opposed to building chargers and then charging people to use those chargers, which is how a company like ChargePoint or Blink Charging makes money, very similar to a gas station, what Volta does is they build chargers and then allow you to charge for free.
But you got to watch the advertisements.
And they monetize because their chargers are these massive digital display screens that have advertisements and are constantly cycling advertisements. So they make money by selling ad space on those digital display ads. And that's their business model. I think it's genius because it's a win for the consumers. They get free charging. It's a win for the company because digital advertising revenues have much higher gross margins, something like 60, 70, 80% than actual EV charging. And it's a win for the installer of the EV charger. So what ChargePoint or what Volta is doing is they're trying to strategically place their chargers in front of very busy shopping centers, in front of Walgreens, in front of Target, in front of movie theaters. Places where if I see an ad right before I go in, I subconsciously might go in and buy that product, right? Like if I'm park my car at a Target, we actually down the street, we have a Target that has Volta charging stations. So if I park even if I'm not parking at the charging station, let's say I park, a couple of feet away, 100 feet away, I park my car and I walk by that charging station and I see this giant ad for Vita Coco water. I've been seeing that recently. And so I see that and I'm like, oh, that's interesting. And then I go in the store, subconsciously I'm thinking about that. And then you know what? If I see it on the shelf, maybe I'm going to buy it, throw it in my cart. Boom. So in that regard, it's a win for Target because Target is now increasing their sales and that allows them to make more money, obviously. So I think it's a triple win business model. That is a very powerful one, and I really like what they're doing. They've had some operational challenges recently as it relates to there's been a massive C-suite shakeup. The co-founders have left the company. That's a little bit concerning, but what I think is actually happening there is the co-founders had this great idea, didn't really know how to run the business, went public, have been missing their targets. That's why the stock has been crushed. And so the board was kind of like, you guys got to go. So they kind of kicked out those guys. They have an interim CEO. They're looking for a new one who can actually execute and scale the business. I think that's a positive operational shift. And once they get the right CEO in place, once they get the right C-suite in place, the idea is ready for rapid scaling. And I think that's a stock that has a lot of risk at these levels, but if you're willing to take that risk and you're willing to lose what could be 50% or 60% on your investment for the chance at making what I think could be 10x or 20x returns from current levels, then I think Volta looks really appetizing here.
Are there any other high risk factors that you want to talk about with regards to Volta?
Well, it's a new model, right? The EV charging model has been proven. It works. The digital advertising on top of EV charging is a brand new business model. It's not proven. It's not shown to work. They have case studies that show that it does increase, sales for this brand or at this location. So there are one-off studies that do illustrate the robustness of the business model and the idea, but at scale, it's not proven. So there's definitely some execution challenges and scaling challenges therein. But to me, those feel fully baked into the valuation. Right, the stock's at $2 and change now. I think that's fully baked in here. I think this stock could easily be a $20, $30, $40 stock over the next 2 or 3 years. So if you have the risk tolerance, again, only for people who have the risk tolerance, I think it's worth a look down here.
For getting kind of the high risk, high reward and the differences between the two, are we seeing when it comes to EV charging, it being like a Coke and Pepsi scenario between Volta and ChargePoint, or do you kind of see a scenario where one of these has to win out because of the nature of electric vehicle charging?
How many gas stations do you go to?
Okay.
The charging industry will evolve as an oligopoly, not a duopoly and not a monopoly, but an oligopoly. There'll probably be about 4 or 5 different players, each with unique strategic differences. Some will be geographic differences, some will be technology differences, some will be proposition differences. That's where Volta thrives, proposition difference. I think ChargePoint is kind of like becomes this national L2. It's what you see almost everywhere. Volta will be in certain locations, in front of Whole Foods, in front of shopping centers, in front of Walmart's, Targets, movie theaters, Home Depot, so on and so forth. And then there are some other names that I think have, like the solar powered charging stations. Those are pretty interesting. But I think long term, it's going to be an oligopoly. 4 or 5 players dominate the market. 2 or 3 dominate 80% of the market. And that's how it's going to go. If I were to name of the top 5, who are going to be some of them, I think ChargePoint and Volta have a shot at being 2 of the top 5. ChargePoint for sure. I think ChargePoint's a lock. ChargePoint is a lock as one of the top 5. Volta, not a lock, but if they do end up carving a niche out for themselves in the top 5, then the stock has enormous upside potential.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.